Hey guys, what's happening? This is Eric here, Mr. Fired Up Wealth, and I want to bring you a quick audio presentation today, a video slideshow on how you can successfully invest in speculative stocks. Now, I'm seeing way too many people in the different groups that I'm in. I'm even getting personal messages. I'm getting text messages. I'm getting emails. Just in the last 2 days, I've gotten over a dozen personal messages asking about some of these speculative stocks. And some of it's kind of scary. I had one earlier today where a gentleman, of course, not mentioning any names, but he's, in his 50s and wanted to, essentially invest in cannabis stocks because he hadn't started investing and wants to try to catch up so that he can retire in 10 years. Honestly, guys, that's not really how investing works. Unless you've got a bunch of money to start with, you're not going to start with, $50 a month at an old age and get rich overnight. That's not how it works. But with that said, I play speculative stocks to outperform. Fired Up is all about outperforming the market, using outperformance, selling profits, and buying DGI, which is dividend growth investing. If you don't know what that is, check out some other videos on the channel. But essentially, you're using house money to buy dividend stocks, and then you're using the dividends to live and to pay for your expenses so that you can retire young and have financial independence. So how do I invest in speculative stocks? And first, what is a speculative stock? So a speculative stock is a stock that a trader uses to speculate. Okay, obviously, right? But what it means really is that the fundamentals of the stock do not show an apparent strength or sustainable business model. Instead, the trader expects that such things may one day become true for one reason or other. And for the present moment, however, the price of the stock is comparatively low and holds a high degree of risk, which isn't always true either. The price doesn't always have to be low. This may be a penny stock or an emerging market stock, such as cannabis stocks, that the trader expects to become much better known very soon. Again, notice how this definition is using trader, not investor, right? Many traders are drawn to speculative stocks due to their high volatility relative to blue chip stocks, which creates an opportunity to generate greater returns, albeit at a greater risk. Most long-term investors and institutional investors stay away from speculative stocks unless they are part of a mutual fund or exchange traded fund. So you could do that. You could invest in a mutual fund or an ETF that has some speculative stocks, or you can do like me and basically create your own ETF. I've got a bunch of holdings. When your account gets large enough, it's not hard to do. And now it's actually not hard to do regardless of the amount of money you have because there's no commissions on most brokerages. It used to be a big deal if you want to invest $100 into stock, you had to pay $5 brokerage fee. It used to be even more than that, but in the last, couple of years, $5, $4.95 at Fidelity, what have you. Well, that's 5% loss right when you start. Well, that's not going to work. Now you can build your own ETF if that's what you want to do, and it could be 50 stocks, it could be 30 stocks, whatever your comfort level is. So, how do I invest in speculative stocks? What's my strategy? So, if you've read the book One Up on Wall Street by Peter Lynch, his philosophy, and I'll read a quote below, I take that and I kind of twist it into my own approach. And what the quote says directly from the book is that if 7 out of 10 of my stocks perform as expected, I'm delighted. If 6 out of 10 of my stocks perform as expected, then I'm thankful. 6 out of 10 is all it takes to produce an enviable record on Wall Street. So basically, he's saying that if six of his 10 do what he thinks they're going to do, people are going to be happy with his results. He's going to have an enviable record on Wall Street. For whatever reason, that's a tough word for me to say today. I take this theory and make it my own with a larger number of stocks in my speculative basket. So I have a basket of speculative stocks. It's a percentage. I have discipline with that percentage, and I maintain an exact dollar amount that I can basically afford to have a little bit more risk on. And that number can be, 5 to 20%. It could be more. It could be whatever you want it to be, depending on your risk tolerance and suitability. Mine usually is 10 to 20%. And as I age, that number goes down. So it used to be 20. It's probably closer to 15. I still do have about 20 to 30 stocks with equal weight. So what kind of stocks am I talking about? Cannabis stocks. So like Green Thumb Industries, Untitled Capital Holdings. You could put Aurora Cannabis in there. You could put, there's tons of bioceutical companies out there, tons of these tech companies that you could throw in this basket. My last video, the top 20 picks for 2020, the end of that has 10 bonus picks that are what I consider speculative picks. So if you're interested in some of those picks that I actually invest in, I've got 10 of them on that video and kind of go through. I've either invested them in the past, or I own them currently, or I'm looking at buying the 10 on that list. Remember, though, that the other money in your portfolio must be in different asset buckets. So I don't want you, this is what people are doing. They're saying, I'm going to, take my 20 grand and put it in marijuana stocks, and it's going to turn into $1 million or something. They're going to be rich overnight. It doesn't work that way, guys. And you need to hedge your bet. You need to hedge your risk. You need to stay diversified. So I want you to pick a percentage of your portfolio that you can afford to gamble on, that you want high risk for speculative. Out of that percentage, you're going to buy a bunch of different stocks. So you don't just put all your eggs in one basket, even with your high risk basket. So, say you take 10% of your portfolio. Let's say you have 100 grand. You take 10%. Now you've got $10,000. You're going to dedicate that $10,000 to your speculative stock basket. Out of that $10,000, you might choose, and maybe you go with 10 stocks, but I prefer to go larger dollar amounts and do 20 to 30. You could have $10,000 and do 10 stocks and have $1,000 in each stock. The strategy is really up to you. I'm just giving you the methodology that I use, and you can kind of make it your own. So the thing I'm trying to drill down here, though, is that the other percentage that's not in your speculative basket needs to be diversified, depending on your age and your risk tolerance, into ETFs, into dividend growth stocks, dividend stocks, large cap growth, metals, commodities, cash stocks, other stock like preferred stocks, bonds, whatever you want. It's up to you, but diversify. I don't want you to throw 100% of your hard-earned money into a speculative industry and then come back and say, there's so many people that put all of their eggs into the cannabis sector, and when it crashed, a lot of them panicked and sold, and now these stocks are rallying. Untitled Capital, guys, in 2 trading days went up over 30%, I think, something crazy like that. The point is, though, diversify. Don't put all your eggs in one basket. I have over 100 holdings. I have over 150 holdings in my portfolio. I have a decent size portfolio, so it makes more sense. And I also aggressively and actively manage that money. You have to decide how much homework you want to do, how much management you want to do. And the nice thing about it is there's no right or wrong strategy. You can have 90% of your money in an ETF, an S&P 500 index fund, like an IVV or a VOO, a VOO, and have 10% in, what they call mad money for all you, Kramer fans out there. But, that term's been around for a long time. But into that 10%, you might throw a couple percent in Microsoft and Amazon, and then maybe you throw 5% into speculative basket. You throw some cannabis in there, maybe some biotech, whatever interests you. So no matter what you do, guys, though, I want you to be diversified in 2020. Please drop me some questions below in the comments. If you haven't joined our Facebook group, go on Facebook, search for Fired Up Wealth. There's a page. There's also a private group. And a lot of our dialogue and our conversation happens in that private group. We actually have polls periodically so that you can vote for what videos you want to see. There's an active poll going on right now, and we're deciding which video I'm making next. This is just kind of a bonus video in between, something I wanted to do quick because, like I said earlier, I've had so many people come at me, and I can tell that there's some people that are going to get themselves in trouble if they don't, hear someone tell them they have to follow something a little bit more strategic than just throwing a bunch of money into 1 or 2 pot stocks and trying to get rich overnight. It's not how it works, guys. If you haven't subscribed, please do. Bottom right corner, hit subscribe, hit the little bell so you get notifications. Appreciate your time. Hope you have a great rest of your day. Thanks for watching. Take care.